Hello everyone, it's Peter Moran from Property Central. I'm here today with our special guest. Welcome Simon Malquini from DSR Partners at the Entrance, correct?
Thanks mate, good.
Right, great to have you. Now, Simon, last week in our video we interviewed our property management team. We spoke about obviously getting close to end of financial year and of course tax returns. Now before we start, can you just give everyone a little bit of a background on your business?
DSR Partners, we're here at the Entrance. We mainly do tax and compliance work for our clients.
Very good. Now Simon, a little birdie told me just recently that you actually went to a convention for plumbers.
Yeah.
And I've never heard of a convention for plumbers before, but there was quite an unusual name associated with that as well.
Yeah, they called themselves the Backflow Organisation, which they did say to me that they're going to have to change their name. But yeah, so I did that via Zoom. Yeah, that seminar, yeah.
That would have been a very interesting seminar.
It was.
Sure. All right, now Simon, obviously being an accountant, a bit like real estate, it's very much a topic on people's minds wherever you go. And when we spoke the other day, you mentioned there's three major questions that people always bow you up and ask you. So that's what we're going to do today, is if you can cover off on those three questions that are most common and give people a bit of an idea of some of the answers involved.
Okay, the three questions I get most at a party. Normally at a party when they find out I'm an accountant, that ends a conversation, except around tax time. Mm-hmm. And here are the three questions. First one, I need a tax deduction. So I want to, should I go out and buy this before the end of the financial year? Should I buy the car or a computer, or what should I do? And I normally say to them, the best tax deduction you have is the tax deduction you don't have. In other words, my brother, for instance, wanted to go out and buy a new trailer or whatever for $10,000. He didn't really need it, and I said, Andrew, you're spending $10,000 to save $3,000 in tax, so still $7,000 out of your pocket. If you need the trailer, or if you need the computer, or if you make a commercial decision, if you do that, you'll let the tax worry about itself. So you're going to have to spend the money anyway.
Right.
So that's the first question, is normally don't make a decision just on the basis of tax.
Okay. Now obviously, sorry for interrupting you, but the government's had the incentive at the moment about the instant tax write-off.
Yes.
And a lot of people think, okay, well that's great, I can go out and buy this flash new car or a trailer or whatever it is, and I get all this tax back within a month or two of buying the vehicle. Is that not how it works?
Yes, you can. After putting you get that tax deduction. So if you go out and you buy a new car for $40,000 or $50,000, I'm pulling the figure out of the air.
Yeah.
You get $15,000 of that back if you use it 100% for tax, roughly. Right. But you're still having to fork out $35,000 of your own money. Now, if you don't need the car and the other one is sufficient, okay, just make a decision. If you're going, well, look, I'm going to have to buy this car, it's going to save me money, or it's a better car, I'm going to have to upgrade anyway, great, we'll use the tax deduction, but don't make the decision based just on tax. It's just clever marketing by, the car salesman or by whoever it is, the government trying to say, well, look, spend money to stimulate the economy. Well, look after yourself.
Right, makes sense. Very good. Now, question number two.
Second question. What can I claim as a tax deduction? I would have to have had this question once a week for the last 20 years. What can I claim as a tax deduction? One, you must have a receipt. So if you have a receipt or a record. And the second one is it must be related to your employment. Now the example I often give is, let's say as an example, me as an accountant, I want to go out and buy a bunch of flowers. They'll say, the ATO will say, well, how is a bunch of flowers related to you being an accountant? No, you can't have the tax deduction. But if I can draw a nexus or a connection between the flowers and work, I can. So if I say, I bought those flowers and I put them in reception, then they go, oh, now it's the same bunch of flowers and it's the same $50 or $60 I spent on flowers. One's a tax deduction, the other one's not, because I could demonstrate I used it for work. So what can you claim as a tax deduction? Anything, as long as you can say, create that connection.
Right. So in my instance, if I went out and bought a new pair of sunglasses because I need them to drive my car as part of my work, would that
no
be
problem.
considered? a tax claim.
No problem. So it's with your car or your telephone, the ATO will say, well, how much of that telephone is business related versus personal? So you need to take that out. But if you can, like sunglasses, anything you've bought for work, no problem. You've then said to the ATO, I need this for work, that's why I bought it.
Even the sunscreen?
Sunscreen, sun hat,
There you go.
protective equipment, anything like that, yes, you can claim.
Very good. All right, now the third one, which is obviously relevant to our industry, is about real estate.
Right, I often get this question, Simon, should I buy this rental property, or what should I do here? And I'm not a financial advisor, so I can't advise you what to do. But I will say, have a talk to me before you actually sign on the dotted line. I've had a few clients come in and said, oh, I've just bought this property. And I've gone, oh, have you signed the contract? It's too late. You could have bought that in a super fund, or you could have bought it, structured it this way, which would save you money in the long term. And the other thing they often ask is, should I negatively gear a property, or should it be positively geared? Well, again, this relates to the first question we talked about. Make a commercial decision. At the end of the day, you want the property to make you money. You're eventually going to pay tax on it. That's great because you've made money. Make money.
Right. Makes sense. There's a lot to it, and I guess that's why you're here.
I try to cover off. This was a 15-minute seminar boiled down to 5 minutes. So if you've got questions, give me a call.
Right. All right. Thank you, Simon. Now, if people do want to contact you, whereabouts can they find your business, and what's the best number to call you on?
We're at the entrance, right opposite Coles. The phone number is 4332 2799. Give me a call anytime.
Very good. And Simon, if you don't mind, I've got to ask you a question. I read a little thing the other day that said, why are accountants so calm, composed and methodical?
I'm waiting for the punchline.
Well, I can tell you now, it's because they have strong internal controls. So, thanks for being part of our video. Thank you for watching. Have a great weekend.